The US dollar collapsing in 2026 is not guaranteed, but some economists discuss scenarios where it could weaken significantly. Here are the main reasons people think it could happen. First, very high US debt. The United States has over $34 trillion in national debt. If investors lose confidence in managing this debt, they may reduce their dollar holdings. More borrowing leads to more money printing, which in turn increases inflation risk. Secondly, countries are moving away from the dollar, a process known as de-dollarization. Some nations are actively trying to reduce their dependence on the dollar. For example, China, Russia, and Brazil sometimes trade using their own currencies instead of dollars. If this trend grows, global demand for the dollar could fall. Third, inflation and money printing. If the Federal Reserve prints too much money to support the economy or pay debt, inflation can increase. For example, during the COVID-19 pandemic, trillions of dollars were injected into the economy. Too much money supply can weaken a currency over time. Fourth, geopolitical conflicts. Instability involving major powers can shake confidence in the dollar-based financial system. Examples include tensions involving Iran, China, and Russia. If global trade routes or oil markets change, the dollar could be affected. Fifth, the rise of alternatives. Some alternatives to the dollar are growing, such as Bitcoin, Ethereum, and digital currencies created by central banks. If global trade starts using these other systems, the dollar's dominance could significantly weaken. However, a full collapse is unlikely soon. Most economists think a complete collapse is improbable because the U.S. still has the largest economy, global trade is heavily priced in dollars, and U.S. financial markets are the most liquid in the world. Replacing the dollar as the global reserve currency would take many years or even decades.